Oh, all right. Hello, Mark Pinto here at Phoenixville Public Library, welcoming you to tonight's presentation on reverse mortgages. And we're pleased to have with us George Dillman. He's a consumer outreach specialist with the Pennsylvania Department of Banking and Securities. George, welcome and take it away.
Fantastic. Thank you, Mark. And welcome to my presentation on reverse mortgages. What can you expect? Again, as Mark said, my name is George Dillman. I'm the Consumer Outreach Specialist with the Pennsylvania Department of Banking and Securities. So we see the ads on TV all the time. You know, Tom Selleck, and prior to that, we had Henry Winkler, maybe one or two other celebrities, you know, endorsing these reverse mortgages, telling us why we should do them. And obviously, you know, we should listen, right? We should listen to Magnum PI or the Fonz telling us we need to do these reverse mortgages. Obviously not, right? As we all know, they're celebrities getting paid to endorse a product. What we need to do is we need to look at both sides of the coin, and that's what I'm here, you know, to talk about tonight. For those of us my age or older, you know, to use an old movie title, we're going to talk about the good, the bad, and the ugly when it comes to reverse mortgages, because, you know, it may be good for some, not so good for others. And that's what we have to decide doing this presentation, you know, you know, if this is the right move for us. So what is a reverse mortgage? Reverse mortgage is a special type of loan that allows you to convert a portion of the equity in your home into cash. Unlike a regular mortgage, line of credit, or second mortgage, a reverse mortgage loan typically does not have to be repaid until the borrower no longer lives in the home as their primary residence, or they fail to keep the obligations of the loan. And we're going to talk about that shortly. Now, contrary to popular belief, you know, you're not giving up ownership of your home. We still own our home. We're getting a loan, again, based on the equity, but we're not giving up ownership. And probably where we hear some of these horror stories from about people having their homes taken away, at least some of the horror stories. We'll talk more about that as we go along. You know, because people, I think they tend to think they're giving up ownership. They no longer have to pay the taxes. They no longer have to pay the, you know, homeowners insurance, any HOA fees that may be involved. Not the case. We still own the home. And whether we have a reverse mortgage or not, I think we all know what happens if we stop paying our property taxes. Our houses get taken away. So we still own the homes. We're getting a loan based on the value of the equity in that home. Now, borrower requirements. The oldest borrower must be at least 62 years of age. They must own the property outright or have significant equity. Now, this question came up probably a year ago now at a presentation I did. Somebody asked me, well, what is significant equity? I didn't have an answer for them. I asked around, I asked several people more knowledgeable than I was. They didn't have an answer. I did some research and found out that significant equity in the home is on a case-by-case basis. Now, my personal thought, my personal feeling is significant equity is anything more than 50% of the value. My home is worth $200,000 and I own more than $100,000 of that home. That's significant equity. However, again, it's a case-by-case basis, and it may depend on the home itself. For example, somebody who has a home that's worth $500,000 and maybe they only have $100,000 or $200,000 of that paid off. So in one sense, they don't have a significant equity, but $200,000, that might be enough that I could do a reverse mortgage on the equity of that home. Now, if I live in a small condo that's worth $50,000, even if I have $25,000 of that paid off, is that significant equity? At least for me as the owner, is it worth my while doing the reverse mortgage if I can only get up to that amount? I may be looking at other alternatives. And again, we'll talk more about that because of the cost, the fees that are involved, and everything that we need to pay. We might be better off going another avenue, so to speak. So we must live in the property as our primary residence. This can't be one of 10 or 20 rental properties that we have that we're doing. It has to be our primary residence, the home that we're living in. We continue to make regular payments of property charges like taxes, insurance, and association fees. Again, whether we're doing a reverse mortgage or not, we know what happens if we don't pay those. We know what can happen. And we don't have any delinquent. There's no delinquent federal debt. Like we don't owe back taxes. We don't. There's no outstanding student loans, whether on us, some children, or even grandchildren that are owed. Now, the HUD insured HECM, or home equity conversion mortgage. This is the standard reverse mortgage in the standard reverse mortgage product. Probably the one that is most considered, and probably the one we do want to consider. Others out there, we have to be careful, especially again with scams that are being run as reverse mortgage options, and maybe the better they look. Again, it sounds too good to be true, probably is. We have to be careful. And maybe another reason why people, have their homes taken away doing a reverse mortgage. They get caught up in some kind of really great deal with a reverse mortgage that turns out to be a scam, and it's all about getting their property from them. So we have to be careful. So this is the standard, the HUD approved, HUD insured HECM, or home equity conversion mortgage. By going this route, you're required to take part in a reverse mortgage counseling session. You want to take part in a reverse mortgage counseling session. Reverse mortgage counselors, just like me, they're not out there to try to push you into doing this. Their job is to do what I'm doing, but with a lot more information, because they're a lot more knowledgeable about this. But their job is to give you, again, both sides of the coin. As I said earlier, the good, the bad, and the ugly to this, and even offer alternatives to doing the traditional HECM, like what's called a single purpose or single use reverse mortgage, where I have one thing that I need to pay for, and I need funds for that one thing, and that might be a better route for me. And here's an example. I have a relative who owns a small farm, actually a farmette, what's left of the farm, like 5 or 6 acres, farmhouse barn. She has a well and a septic, and basically at the same time, she needed that well and septic replaced. And if she was looking at about $20,000 to do it, $20,000 she didn't have. She looked into, she qualified for the single purpose, single use. You basically have to tell them what you're going to use those funds for, and you have to use those funds for that purpose. Again, single purpose, single use. And she did. And just like the traditional reverse mortgage, she doesn't have to pay that money back until she sells her house, or she no longer lives in that house or as her primary residence. And she does it without all of the additional fees that we're going to be talking about shortly. So maybe a good alternative for somebody who's looking at a reverse mortgage to do, and they'll cover things like this. So we want to sit down with a reverse mortgage counselor. There is a fee. We may qualify, depending on our income, we may qualify for no fee, but a number of people, I think most of us do have to pay a fee. However, like all other charges, I guess the other advantage is, like all other charges involved, that can all be rolled into the reverse mortgage itself, so those don't have to be paid until until we no longer live in the house as our primary residence. This protects the estate. The HECM protects the estate from having to repay more than the current value of the property. This loan is what's known as a non-recourse loan, basically saying that we cannot owe more than what the home is worth on the loan. Here's an example. I qualify for $200,000 and for a reverse mortgage, and one popular way to take these funds is on a monthly basis. I get a monthly payout, so I'm getting an extra check. Maybe all I'm getting is Social Security, and I get this extra check every month with the loan, the monthly payout of this loan. I live longer than anybody expects. I live 30 years, and with all of the other fees involved, plus the money that I'm getting out on a monthly basis, say I end up owing more than the loan. I owe $250,000 on the loan. Well, this loan guarantees that I don't have to pay that the $50,000. The only thing that is owed is the $200,000. There's mortgage insurance that I need to take. And again, we'll talk about that with fees, but mortgage insurance I need to take that covers that. It covers any charges over. So home, I no longer live in the home gets sold, it gets paid off. I don't have to worry about paying the additional $50,000. As an added bonus to that, by the way, if I do have heirs and one of my heirs steps in and says, hey, I want to buy the house, they can purchase that house at 95% of its value. So if it's valued at $200,000, they can step in and purchase. Not only do they not have to pay the additional 50, it's covered by the mortgage insurance, but they get the house at a reduced cost. But the mortgage insurance covers that. So non-recourse loan would never owe more than what the current value is of the property. Also, the borrower is protected if the lender is unable to keep its obligation. I get connected to a HUD-approved lender. I start getting a monthly payout, and say for whatever reason, 2 or 3 years down the line, that lender goes out of business. Gee, now what? I'm used to getting that monthly check from them. The mortgage insurance steps in and guarantees that I continue to get those monthly payouts. So some good benefits to this. HECM for purchase. We can do a reverse mortgage on a future home, on a home that we're looking to buy. And again, here's the scenario. Now, by doing this, I do need to have a significant, here's that word again, significant down payment on that future purchase. I do have numbers for this, at least percentages. I need to put down on that future purchase, I need to put down anywhere from 45 to 62% of the price in order to do the reverse mortgage. And it depends on my age. And in this case, the younger I am, the more I need to have down. If I'm 62, which is the minimum age to do a reverse mortgage, I need to have 62% down. As I get older, it gets lower, up to 45% down, and then it stops at 45%. So say I'm in the range where I need to have 50% down. I sell my home that I'm living in now, and I'm looking to buy a bigger, maybe a nicer home down near the shore or on the, down at the shore, nicer a place to retire to. And I need to have 50% down. I sell my home, $100,000, I put that down. I can do a reverse mortgage on the additional $100,000. And again, that does not have to be paid back until the home is, until I no longer live in that home as my primary residence. Now, in this case, I don't think there's taking any money out, but the good news for this is there is no mortgage payments on the additional $100,000 because I'm doing the reverse mortgage on that. So something else for people to consider is a HECM for purchase. All right, reverse mortgage counseling. Usually pay, again, there is a fee for this, usually paid out of pocket, can be free if you qualify. And again, we can either pay it out of pocket or we could roll it into the overall loan with the other fees and charges and the money that we get out, so on and so forth. It's done either face-to-face or over the phone. It's recommended you take somebody with you, maybe an heir, somebody who has a vested interest in this, several people if you want. Because again, they have nothing to hide. They're not trying, this isn't some type of gimmick to try to sell us on a reverse mortgage. Reverse mortgage counselors are there to give both sides, to give you the information and let you decide. So take anybody that you want with you to the session, bring a list of questions that you have, take notes while you're there, and make sure you completely understand everything that's involved. And again, they're going to even offer alternatives at these sessions. After your counseling session, you should be able to make an educated decision on whether a reverse mortgage is the right solution for you. If you want to proceed with a reverse mortgage, you will be ready to find a HUD-approved lender. And from the way I understand, reverse mortgage counselors will even have a list of HUD-approved lenders that you could get from them to approach. Financial requirements. There's no specific credit score required. However, income, assets, living expenses, and credit history are verified. The lender will also confirm that you have historically paid your real estate taxes and homeowner insurance premiums on time. In a nutshell, why? Because contrary to popular belief, a legitimate HUD-approved lender is not looking to take our homes away from us. They're not in the real estate game. They're not in it to do that. They want us to be successful with this. That's why they do it. Fees. Here we go. Now I think we're getting to the bad or the ugly or something like that. Normally paid at settlement from loan proceeds. Again, this all can be rolled into the loan itself and not paid until after we no longer live in the home as our primary residence. Let's start with the HECM mortgage insurance. HECM mortgage insurance premium. Right off the top, 2% of the value of the home or the loan, say $200,000. Easy, my math is bad, but I even with that too, and that's why I use a nice round number like $200,000. At that, we're looking at $4,000 right off the top for this insurance that we need to have, and we want to have with the benefits that come with it. On top of that, on a yearly basis, we're going to get charged a 0.5% interest on the balance of the loan. We have to remember, different from a traditional mortgage, where every year that loan gets paid down. In this case, the loan it increases, it grows. So every year that 0.5% that we're paying, gets larger and larger and larger. And of course, just like any other loan, we're looking at interest that's getting charged, compound interest that's on the loan, the balance of the loan itself. So those things go up, and those are things to take into consideration and maybe look at all the alternatives. In addition, we have, just like with a traditional mortgage, origination fees, servicing fees, third-party fees. Maybe the lender wants to make sure that my home really is worth $200,000. I want to send a home inspector out there to inspect the home. Guess who has to pay for that? The homeowner. But again, that can get rolled into the loan itself, but that's still something else we may be looking at paying. Repairs if required. Home inspector comes out there and hey, home looks good, but it looks like some of the wiring needs to be updated. Guess who has to pay for that? Guess who has to get that done if they want to do the reverse mortgage? So the things that we need to take into consideration, with this loan before doing it. So what are your financial needs to be prepared for emergencies? Another way of taking this loan is like a home equity line of credit. I get approved for a $200,000 loan on the value of my home, and maybe I just have those funds available if needed. 3 years down the line, I need $5,000 for something. I have it available. 5 years later, I need another 6 or 7. I have those funds available. So I can do like a home equity type of thing. Basic home improvements. Maybe I'm not looking at a single purpose. I'm looking at doing this, looking at doing that. Maybe I do the home equity line of credit again. I'm not sure how much I'm going to need, but I take it out piecemeal to do those home improvements. And then of course I pay that back when I no longer live in the home. Help make ends meet. Again, a very popular way of doing this is that monthly payout, like getting an additional check. 45% of Americans, by the way, statistics show that 45% of Americans retire with nothing to fall back on but their Social Security check. And in some cases, in a lot of cases, that's not enough to get by. So this might give me that extra income if I'm in that situation. Might give me that extra income to get by, to help make ends meet. I get that monthly payout for as long as I live in the home. Long-term in-home care, another to pay for that cost, can be used for anything. And as the asterisk said, we got to be careful. This can be risky. Again, if we take, because we can also do like a lump sum, or we do the home equity and we end up taking those funds out really quick. And now what? By the way, used for anything, this reverse mortgage can also be used to pay off an existing mortgage. So there's different things. It's really kind of open as to what we do with it. Other things to consider: how much longer we'll stay in the home. If I only plan to live in the home for another 6 months, a year, might not be worth it. With all those fees, again, that 2% right off the top, $4,000, might not be worth, living or collecting that check for 6 months, even a year, knowing that I have to pay all that when I sell the home and I relocate someplace. So that's something to consider. Are there other options available to help you cover your needs? What about your estate? What are your heirs? What do they have? Do they have something to say about this? A woman came, a colleague of mine also does this presentation, and she had a woman come to one of her presentations who said that, she said she was considering a reverse mortgage, and she talked to her daughter about it. And her daughter seemed fairly upset that her mother was even considering doing a reverse mortgage. She probably had a vested interest. Maybe she's looking to inherit the house. And she said, well, Mom, how much money do you need extra? I don't know. I think, like $300 a month, I should be good. Okay. Her daughter started writing her a check every month for $300 rather than doing the reverse mortgage. Now, I'm not telling people to hit up their relatives, for money as opposed to doing a reverse mortgage, but we look at other alternatives. There could be other alternatives out there. Maybe she moves in with her daughter to save money that way. They share expenses. Can impact your eligibility for certain government benefits. Maybe I already qualify for I'm already getting government benefits. And now I get that monthly payout and I'm making too much money. I get those benefits cut back. So it's kind of a wash. I'm not getting anything extra in that case, or I don't qualify for those benefits that I would have qualified for. So that's something else to take into consideration. Now, again, there's different payment options. We talked about this a little bit. As far as it's not on here, but we can do a lump sum payout, which got to be careful with that. But we could do a 10-year, right? Monthly pay. I think this is the most popular way to do it. I get that monthly check as long as I live in that home, which is like an additional, like a pension check, additional retirement check. I can do it for a certain term, and here's a scenario. Husband and wife, they have a relative that they're looking like 10 years down the line. I'm the relative. I'm 10 years older. They want me to move in about 10 years. The kids will be gone. They'll be raising their own families. They'll have plenty of room. They want me to move in with them. So they can keep an eye on me. They can take care of me as I get older. It's a double bonus because I pay them room and board, moving in with them. So I know I'm going to need this though to get by for the next 10 years. So I do it for a term period, the next 10 years, and then I'm done. Line of credit. I say I qualify for a $200,000 loan, and I just have those funds available that I can dip in if and when needed, or I can do a combination of different types. Are there other options to consider? Traditional mortgage. Mortgage rates, how low are they now? Could I cut my mortgage rate in half? Could I save enough money that but just by remortgaging my home, I'm getting those additional funds? A traditional home equity line of credit might save me some fees. And now in this case, of course, I need to be able to pay that money back right away as opposed to waiting until, but still it could be another option. Assistance from other resources. We've mentioned, things like food stamps, energy assistance, other county programs. And down the bottom, it says, check with your local area agency on aging for resources you may not be aware of that you could qualify for. Maybe just by getting energy, one or two of these things is enough that I don't need to consider reverse mortgage. Other options, a part-time or full-time job. Maybe I'm getting bored sitting around the house anyway. Go out, make some extra money, and I have the extra. I turn a hobby into a business and make extra money that way. Downsizing. Husband and wife live in a big, one of those 6-bedroom, 4 full bath homes, and they don't need to, they decide to downsize to a nice little 2-bedroom condo, and they save enough that way. They don't have to worry about it. Relocating is another option. Parts of this country where the cost of living is lower, or some people relocating. Number of people are relocating, not for everybody, but a number of people relocating to Central America, to countries in Central America, South America, Mexico itself. I saw several things where like 1.5 million North Americans, meaning when I say North Americans, I'm talking about from the U.S. and Canada, living in Mexico, retired to Mexico. Why? Because of the cost of living. A lot of these people are living on Social Security checks, and they're going a heck of a lot farther down there. So again, not for everybody, but that's certainly a consideration. Renting a room. Maybe I'm looking to rent a room. Maybe I have an older relative that I want to keep an eye on, or two, and I move them in and they pay me room and board. They share expenses, and we cover it that way. So we look at other options. Things to avoid: borrowing money to fund investments. It's really when you look at all of the fees and you add it up, the fees, the interest, the compound interest, you're really not going to make out. And I'm just talking a legitimate investment. It can be even worse if we're looking at some type of a scheme to scam us out of money. I mean, you come across this great investment opportunity where you guaranteed rates of return, high rates of return at little to no risk. Do you know who offered all that? A gentleman by the name of Bernie Madoff, that we all know, and we know what happened there. How many people lost a lot of money? Some of these people lost their entire life savings, because they thought this was a great investment opportunity. And he's, as you can imagine, he's not the only one out there. There's plenty more Bernie Madoffs out there looking to take advantage of people. So we have to be careful. We don't want to borrow this money to fund an investment, especially if we're not sure about the investment. Short-term needs. Again, if I only plan to live in the place for another 6 months to a year, might not be worth it with all the fees and the charges that are involved. Using a reverse mortgage to help others. This depends on what the money we use for. We got to be careful. We use up all that equity in the home in the form of a loan, and now what? Now we have nothing to fall back on. So we got to be careful with that. So what are the drawbacks, or maybe other drawbacks? Upfront insurance costs can make the loan more expensive than other alternatives. Again, something to consider. If you use all of the equity in the home early on, you may not have anything left for a rainy day. Can affect your ability to qualify for Medicaid or other government programs. Again, am I just going to have a wash? I get this check coming in every month, but I either have to cut back on benefits I am getting, or I don't qualify for benefits because I have too much coming in. So other considerations. Before you decide, talk it out. Family members, friends, other people that trust, pastor, rabbi, imam, someone in your social services. How about other people that are already doing reverse mortgages? Maybe you could find a few other people that are already doing it. Ask them how they like it. What are the pluses? What are the minuses before we go ahead and do a reverse mortgage? Repaying the debt. Family members have the ability to pay the mortgage in full. They could, and one of those ways, of course, is the sale of the property. Or property could be auctioned off if the loan is not paid. And again, a typical scenario with that, I live my life in the house, and again, maybe I owe more on the loan than what the house is worth. Again, that mortgage insurance covers that, and the lender takes the home, auctions it off, gets their funds and probably the balance from the mortgage insurance, and everything's good. So different ways that we can repay the debt. Remember, if you don't properly maintain the home, we have to maintain the home. We have to keep it basically to its present value. I'm told it's not often done, but the lenders do have the option of sending somebody in anytime they want to inspect the home to make sure we are maintaining them. What they don't want is to give us a loan based on a home that's worth $200,000, and then 20 or 30 years later, they're not getting anywhere near the value back because nothing was done. The house was just left to fall apart, so to speak. So we have to properly maintain the home. We have to pay the property taxes. We have to keep appropriate insurance and of course the HOA fees. We talked about this several times, but again, we still own the home. We're still obligated to pay those. And again, whether we have a reverse mortgage or not, we know what happens if we refuse to pay our property taxes. At some point, we get our home taken away from us. So, and again, so in those cases, the lender could foreclose on your home, and where we might hear those horror stories again. Oh my God, I did a reverse mortgage and I had my house taken away. Well, you weren't paying the property taxes, just like somebody who doesn't have a reverse mortgage, you don't pay your property taxes. Somebody's got to pay. So somehow they gotta get paid. So do your homework. Call HUD to find a reverse mortgage counselor at 1-800-569-4287. Get your list of HUD approved lenders from your counselor or search online at hud.gov. You can also reach out to our agency, Pennsylvania Department of Banking and Securities, to ask about your lender, broker, and other questions as well. 800 PA Banks is our phone number. Our agency, a little plug for our agency, our agency regulates the banking, securities, finance industries in Pennsylvania. If anyone ever has a question, a problem, an issue as it relates to that, they can reach out to us. We have an in-house staff that will take phone calls. And if Monday through Friday during normal business hours, 8 to 5. If you call during those days and times, you should get a live voice. You don't get a live voice, you leave a message, and somebody should get back to you within 24 business hours. I stress business hours because if I call after 5 o'clock on a Friday, I shouldn't expect to get a call back until sometime after 8 o'clock Monday morning. But within 24 business hours, if you don't get a live voice, somebody should return your call. Questions, and here is my contact information. And with that, I think we could stop the recording.
Any questions there?
If you want, I'll tell you what, Mark, if you want to stop the recording and then we can take questions from our audience of one person, unless she left. No.
If you want to stop the recording, that's fine.
Oh, yeah, probably better that way, Mark. I'm sorry. Yeah, probably better that way. And if Kate has a question, she doesn't want to